Hey everyone, and welcome back to the podcast. I'm Mark.
And I'm Jenny. Mark, were you just reading about financial results? Don't tell me you found a new way to make spreadsheets exciting.
Okay, you caught me. I was. But not just times financial results, Jenny. We're talking InterDigital's Q1 2025, and trust me, there's some seriously interesting stuff in here, even if numbers aren't your usual jam.
All right, you've piqued my interest. InterDigital. They're the tech R&D and licensing folks, right? The ones with all the patents?
Exactly. They develop foundational technologies, especially in wireless and video. Think of them as the folks building some of the core pipes that make our phones and streaming work. And their latest report. Well, it's a bit of a mixed bag on the surface, but dig deeper, and it gets pretty cool.
Okay, lay it on me. What's the headline? Give me the juicy part first.
So on the face of it, revenue was actually down about 20% year over year in Q1 2025. They brought in around $210 million compared to $263 million last year. You might see that number and go, what's going on?
Yeah, that does sound a bit concerning initially. Like, if sales are down, how is that? Good news.
Right? Here's where it gets interesting. Despite that revenue dip, their times net income went up a good chunk too, from about $81 million to $115 million. That's like a 41% increase.
Wait, how does revenue go down but profit goes up? That feels counterintuitive. Like trying to spend less but somehow end up with more money in your bank account at the end of the month? Is there some magic involved?
Not magic, but some smart business decisions. This is the cool part. It comes down to some serious cost optimization on their end. Get this. Their operating expenses were basically cut in half. They went from around $160 million down to about $79 million. They're managing their costs really effectively, especially around licensing and enforcement. Less spent on operations means more flows to the bottom line.
Okay, so they're spending way less, which is boosting their bottom line even if the top line isn't as high. That makes sense. And I guess if it's a licensing business, the timing of those big deals can really swing revenue quarter to quarter, like getting one big check instead of a bunch of smaller ones spread out?
Precisely. Their CEO, Liren Chen, mentioned that the revenue dip was largely due to the timing of some license agreements and their renewal cycle. It wasn't a fundamental problem with their business model or demand. But here's the number he was clearly excited about. Their annualized recurring revenue, their ARR, is at a record high, up 30% year over year.
Annualized recurring revenue. So that's like the predictable, steady income from their ongoing licenses? Like a subscription service for tech, but for big companies?
Exactly. Think of it like that. It's the money they can count on coming in year after year from those foundational technology licenses. And that number being up so significantly, despite the overall revenue dip, tells you they're signing some important, long-term deals. It's the steady heartbeat of their business.
Okay, that paints a much clearer picture. So who are these big deals with? Anyone we'd recognize?
Oh yeah. They specifically called out a major licensing agreement with Vivo, one of the top global smartphone vendors. That deal alone is a big part of why their arranged buy is through the roof and why they beat their own earnings guidance.
Vivo. Yeah, you see their phones everywhere now. So InterDigital's technologies are powering those devices, and Vivo's paying them for the privilege. That makes sense. It's like paying for a recipe ingredient that everyone needs for their phone.
Right? And it covers a huge chunk of the market. InterDigital now has licensing agreements covering about 80% of the global smartphone market. That's significant market penetration. They're in almost every pocket, even if people don't know their name.
80%? That's impressive. They truly are baked into the mobile ecosystem, like a vital silent partner. Any other interesting partnerships they mentioned?
Another one they highlighted was with HP, expected to sign in Q2 2025. This one's interesting because it's in consumer electronics and IoT. It shows them expanding beyond just smartphones and into other connected devices. Not just the phone in your hand, maybe the smart speaker on your counter.
HP. Okay, so printers, laptops, maybe their smart home stuff? That starts to open up a different market for them. It's not just about who's making phones anymore. It's about who's making anything with a chip and a connection.
Exactly. Liren Chen, the CEO, pointed out that their cumulative total contract value since 2021 is over $3 billion. That's a solid base for growth. And these new deals, like Vivo and HP, are adding to that base and setting them up for future predictable revenue. It's like building a really strong foundation.
So even with revenue down in one quarter, the underlying health of the business looks pretty strong because of these long-term licensing deals and their cost controls, like focusing on being efficient and time securing future income.
That's the core takeaway. They're managing their expenses effectively, securing major, long-term licensing agreements, and expanding into new areas like IoT with partners like HP. Their cash position is also strong, almost $900 million, which supports things like dividends for shareholders and share buybacks. That's a war chest for future moves.
Okay, that cash position definitely adds to the picture of stability. So despite the headline number looking a bit soft, the details show a company that knows how to manage its business and secure future revenue. They're playing the long game.
Precisely. It's a good example of why you have to look beyond just the top-line revenue number. The recurring revenue, the cost structure, and the strategic partnerships tell a deeper story. They're positioning themselves for growth not just in wireless, but also potentially in auto, smart home, and other connected spaces. Anywhere a signal goes, their tech might be needed.
And I imagine, as things like 5G and the massive expansion of IoT continue, their foundational technologies become even more valuable. Everyone needs those underlying patents.
Absolutely. They're riding that wave of increasing connectivity, and they even mentioned integrating AI research into their core tech, which could further optimize their wireless and video encoding. It feels like they're thinking ahead, making their tech even smarter and more efficient.
AI optimization for wireless and video. That definitely sounds like where things are headed. More data, faster streaming, better quality, all powered by fundamental tech. So taking all this in, it sounds like InterDigital's Q1, while showing a revenue dip, actually highlights their strategic strength in securing long-term deals and managing their business effectively. It's less about the single quarter's revenue and more about the growing base of predictable income and market expansion.
Nicely summarized, Jenny. It's a testament to their licensing model and their ability to cut costs while still investing in important partnerships. They're playing the long game, building up that recurring revenue stream.
Fascinating stuff, Mark. Thanks for breaking down those numbers and making it understandable. It's a reminder that you always have to look past the headlines. The devil, or in this case the prophet, is in the details.
My pleasure. Always happy to dive into the details. All right, everyone. That's our look at InterDigital's Q1 2025 results. It's a company quietly building the future of connectivity, one license at a time. Thanks for joining us.
And we'll catch you next time.